I met with two of Indemo's Spanish partners, Federico Gaito and Ilja Hagins, to answer the questions that the community has been asking. Perfect. Maybe you can give a few words each about your experience, your expertise, and what you bring to the table today.
Okay, maybe I will start. As they already mentioned, I'm the managing director of Tamarindo Vector, who is currently the originator for Indemo and is working in the fields of buying and working with NPLs, non-performing loans, and discounted real estate. So we have a wire and long, let's say, experience and working in this area in Spain for more than 15 years. So that's why probably we were chosen by Indemo as one of the first one to play the product.
Hello, everyone. I'm Federico Gaito. It's my pleasure to be here in this call. I'm managing founding partner at Taurus Ibérica. Before Taurus Ibérica, I worked for GMA CRC and BBVA and Citibank for around 15 years. So I have a total of 25 years of track record in the banking and servicing industry. Taurus Ibérica was founded in 2009, just after the aftermath of the GFC crisis. We have three business lines at Taurus Ibérica. One is on the advisory side, where we have a big data platform and we work very closely with investors, helping them in due diligence, both legal and valuation of real estate assets. We have a big data platform and evaluation software. Then we have a real estate broker, second business line, where we have around 110 branches nationwide and a team of 450 real estate experts, very local. And the third business line is the servicing, where we service NPL and REO portfolios with a very niche strategy to help investors get their returns and borrowers also begin approaching with a more social approach.
Okay, wonderful. Great to have such well-experienced speakers today. Now let's move on to today's agenda. Today's agenda will be the NPL market context. So now let's start with some warm-up questions just to get the juices flowing. First warm-up question, briefly, in a sentence, what are NPLs in general?
Maybe I will give here the floor to Federico as the most experienced here on the table.
Yeah, NPL, let's say, very basic, stands for non-performing loan. Means that are loans in which the debtor has unpaid amounts to the creditor of the loan. This is basically what an NPL means.
Mm-hmm. Just for those that don't have all the knowledge, so they can get started on understanding what we're talking about here. Right. Second question, what are real estate-backed NPLs?
Well, sometimes when there is a mortgage, and the mortgage is always backed by the real estate, so that there is a hard collateral, as we call it, stones actually, because sometimes you have the loan with no collateral, like not your credit card. It's a loan without a collateral. But real estate backed one is a mortgage loan, which occasionally, by any reason, was not at the end continuously paid by the debtor. So it becomes non-performing loan for the bank, but with the collateral as a real estate.
Okay, perfect. So now let's move into the first topic, the market context. First question, up for grabs. How would you describe the current state of the NPL market in Spain? Are we in a buyer's market?
I mean, I think that the current status of the Spanish market is we are in a very sort of a mature market. The market started after the GFC crisis in 2009. At this time, the market grew exponentially in size, reaching more than 250 billion in size. And I'm talking only about secured, not unsecured. And transactions also at some point reached more than 60 billion per year. So it was a very significant market. After COVID, and particularly in the last 3 years, the market basically came down a lot in terms of size, in terms of transaction volume, mainly due to the situation of the Spanish economy that is quite booming, at the same real estate market that is booming a lot. So now we have a very different market, as I was saying. The situation now is that it is a market with a different structure. Like before was a market more for very large institutional investors, because the deep and read of the market was very big, and investors could deploy very significant amount of money. And now it's a market that is more for smaller investors. So it's very good for small investors that can leverage a lot from a very mature market, very stable from a sort of a regulation point of view, and quite advanced compared to other markets, and also has a significant size for this type of investors.
The only thing that I can add, truly agree that it's a time for the smaller investors like Tamarindo and other players on the market that are not ready to buy with the hundreds of millions, are ready to buy for millions or tens of millions. So we're feeling ourselves very comfortable, and we feel our power that we can offer the price to the seller that he will accept, but also putting our terms and conditions while we're buying and when we're buying.
So then I guess the next question is, what is the typical discount rate? What is the range for secured NPLs backed by Spanish real estate? And what has changed in the last 12 months, say?
Yeah, I mean, I can take this one if you want. I think that, I mean, we, at Taurus in the last 15 years, more or less, we looked at more than 5% of the portfolio transacted. But we have a lot of, let's say, a good sense of what's going on in pricing here. And here depends a lot, and I'm sure that Ilja would agree, it depends a lot in the portfolio type. So the legal state which the loans are in the portfolio. So you cannot price the loans that are at the very early stages of a default, and those that are close to auction, or those that are already starting converting to another because as we all know, the times is money, and this basically affects a lot of the pricing. Okay, so one of the characteristics of the portfolio is the let's say the legal stage of the loans, and then basically the other characteristic will be things like the collateral that it is backing the loan. So some areas and some collaterals have been appreciating a lot in the last 5-7 years, and other collaterals are located in areas where prices are quite depressed, etc. So it depends a lot on the let's say legal stage, value type of debt. I mean, to be very technical, I don't look at very now, but depends a lot on the type of debtors that are also in the loan, and things like the LTV of the loan. That will be a combination of the value of the real estate and the loan amount. So depends on this. I would say that to answer a little bit of part of your question, the price range could be somewhere between 40% to 60-65%, depends on a combination of all the factors that I just said.
Mm-hmm.
The only thing that I probably add that today, coming back a bit back to the previous question, we are in the position that we are allowed and what we like to make more cherry picking. And sometimes, yes, we're ready to receive let's say lower discount, a bit higher price, but knowing that the real estate is good one, it's legal one, it's placed in a good place, and the legal stage is quite progressive one. So between, as Federico mentioned, between those conditions, we can understand what will be the price. But I agree that the discount range between 40 to 60%, depending on the things that were mentioned.
Okay. And from your perspective, what would be the main difference, or the main differences between managing NPLs backed by residential assets versus commercial or land assets in Spain?
Well, from let's say from my side as a buyer side, as an investor, there are, let's say, pluses and minuses. As Federico mentioned, time is money. So it's not only the question of the legal proceeding, which sometimes with the commercials and land assets are faster, but it's also the liquidity. How fast can you sell this asset and receive the revenue back? So our decision of going more to the residential asset was that the legal proceeding sometimes maybe covers a bit more time that we thought it would take, but it's very specific and very concrete. There are specific steps that should be fulfilled, and the legal stage is that. And if we're talking from the perspective of the liquidity, how fast can we sell the residential real estate due to the fact that the demand in Spain is quite high, not only today, yesterday, or a year ago, it's been on a high level for many, many years. And the important thing that the market is not overheated. We know that we will be able to make a realization of this real estate. We'll be able to sell it for the reasonable price to receive a profit for ourselves and for the investor of Indemo.
Mhm. Anything to add, Federico?
No, I would simply add, I agree with Ilja that it's a matter of the collateral type. That is one of the key components here. Residential and commercial are very, very different type of assets. You have the liquidity aspect, and then that in Spain, as we know, residential is like the king of the market because you have a housing deficit here in the market. So whereas on the commercial aspect, it depends on which commercial assets you're looking at. Could be office, retail store, logistics, warehouses. Depends a lot also on the location. There are assets that are more demand, commercial, like logistics or hospitality. But there are other assets that are really illiquid these days in the market because they are not with all the situation that happens working from home, etc. Some of the offices depends the location of the operator. Then the other component that for you can add is the debtor type. Normally, the debtor that is within a commercial loan, a commercial real estate asset, it tends to be a company, whereas the residential tends to be an individual. So the regulation and the type of judicial process is different for individuals than for companies.
Now we have a community question. So we asked our Telegram chat, we sent a survey asking them to see if they were interested, if they wanted to ask you guys a question. And from the Indemo community, we have our first question from the community. Why is the return on invested capital so high for NPLs? To give more context, they added, is it due to steep increase in house prices over the past decade? For example, if the property value has increased by 50%, banks might be recovering more of the original mortgage value than expected. So again, the question, why is the return on invested capital so high for NPLs?
Maybe I will start and then Federico can add a bit. It's a very, let's say, specific and concrete question, but sometimes we need to make the long story short. Obviously, we're buying the NPLs with a discount, depending from which number we're discounting it, from the debt amount or from the collateral market value amount. Also, when we make our due diligence and we make our choose of the NPL that we want to buy, we try those two numbers, debt versus real estate price, to be more or less equal. So let's imagining that we're buying an NPL with, let's say, on average on a 50% of discount. Then what also we should keep in mind that we have done, so we have already from the start the margin of about 50%. So taking into account that there is a three years proceeding with the price increasement, with the price increasement due to the cumulative interest of the investor that invested in the NPLs. So after a couple of years, we might think that, okay, we have reached the price of 75% from the market value of 3 years ago. But the good thing in Spain is that the market is growing, but growing not like 20, 25, 30% per year. No, there's a very stable growth of from 7 to 10% on a yearly basis for the past many, many years that allows us to prepare ourselves to the time of the legal proceeding, to potential out of court foreclosure. And this is actually the reason why the returns are, I won't say that they're so high. They're very understandable from the investment perspective. We're talking about the returns of, let's say, sometimes 12, sometimes 15, sometimes 10%, depending on the real estate, the price, of the time, how fast the NPL was closed. But keeping in mind the margin that we have, the decreasement of the market price, and our Taurus professional work of trying to make the foreclosure as fast as we can. This is the reason why the returns are, let's say, double digits, but very reasonable double digits. We're not talking about 20, 25, 30%, not because we don't want to bring them. No, this is the market. This is the market. We need to understand that we're investing in at the back secured loan, back assets by the real estate which grows on average for the past years from 7 to 10%, and with different professional instruments, we're able to bring the investor 12, 15% on average per annum as far as we're doing it.
Anything from your side, Federico?
Yes, I simply to add that we need to understand that these type of assets are assets where there are really problems for the seller, for the bank. So they cannot really handle the situation. They cannot. They don't have an out-of-court strategy. They are not in the real estate business. So this is something that they need to dispose. Okay, so it's a problem from them. It's an opportunity for people that investors that know how to price these assets. And the thing is that you don't have many people capable of doing this investment. This is not like a stock exchange, where you have a lot of people with different. I mean, you have. You need to know real estate. You need to know real estate on the location of the specific real estate. You need to know the technical aspects of the loan, and then you need to be able to service this. Okay, so if you add all these things together, basically means that you have a problem on one side, someone that really wants to dispose it because it's a problem, very very expensive for the bank to keep these toxic assets in their balance sheet, and it is an opportunity for people that have capabilities of due diligence, pricing, and managing this.
Well, that's all the time we have for today. Tune in next time when we will discuss the NPL servicing lifecycle and management. Make sure to subscribe to not miss out on the next video and follow us on socials for more updates. I'll see you there.